As you rightly pointed out, the president gave a seminal speech. He's been quiet about the economic crisis in ways that have been quite surprising. He's not really given a major speech since October 2021 on the economy, even though we've seen significant ups and downs. So this was a major speech, and the purpose of this short presentation is to try and analyze it from the point of view of those of us in civil society that are focused on policy analysis. I start off with a little kind of framing. We have a situation in Ghana which can be akin to high fever. The country is seriously heated, and we've been seeing fairly crazy things happen to the currency, to inflation and people's living standards and the likes of it. The president is cast in the mold of a doctor. He's a senior doctor. He has the executive authority to try and fix all our problems. So the doctor comes in to do a diagnosis. And the way these things typically go, the diagnosis is the starting point, right? You have to get it right. And I think Honorable Segbefia in your studio mentioned that point, which is a very critical point. The diagnosis is central. Why are we where we are? Then that gives you a sense of where things will go. That's the prognosis. And the treatment is based on having a view to both the prognosis and the most optimal treatment available. So unless we get the diagnosis right, why is Ghana in such high fever? The prognosis will also be questionable. But if the prognosis is questionable, we have doubts that the treatment will be any better. My primary concern with the president's speech is very similar to what you have said, to what Honorable Segbefia has said, to what my very good friend Kofi Bentel has said, and my colleague at Imani has said, and others have said. But the slight emphasis that I want to make is to go beneath the numbers and try and work out why it is that the president is being misconceived on this matter. Secondly, the president does admit that a lot of things have to be done. But when you look at why we are where we are, he does not admit that primarily his policies are a major contributory factor. That's a key issue. Are his policies a major contributory factor? He insists that the jolts that has hit the economy, the shocks, are entirely external. He does admit that we have to do certain things different and improve and the rest of it. But as to why we are where we are, he does not accept that his policies are primarily responsible. So that's the first point. He also does not believe that as far as, given the fact that he doesn't believe that his policies are concerned, it is his policies that must change going forward. And those are very critical elements. He thinks we are also not that worse off compared to our neighbors. That's the key insight that I drew from the speech. The key concerns that I have about the speech is that he does not think that his policies are a primary contributor. And because he doesn't believe in that, he suggests other measures that are not related particularly to his policy. They may be related to the structure of the economy or to things like that, but not to his policies. And then he also thinks that Ghana is not that worse off. This is a problem that affected all countries the same way. Those are the key issues that I need us to probe carefully. And because we have thematic points that are very important in this discussion, I will go in that same fashion. So I'll start with inflation, then touch on depreciation and debt restructuring and things like that. On inflation, to buttress his point, he mentions Senegal. And then he says, look, Senegal has seen its inflation rate grow by 11 times. And Ghana has seen only 5 times. So we must be better than Senegal. As a presidential speech or for a presidential speech, accuracy, the quality of the analysis is extremely important because we assume that the president has access to the best talent in the land. The most serious analyst in the land must be available to the president. You cannot write a speech in which there are major errors because it raises questions about the capacity that is available in the president's office to do the right management and to do the right oversight and to do the right analysis to solve our problems. So I simply went and checked. And it appears that they picked up one single inflation number for a particular month, compared it to one particular inflation number in another month a year before, and they concluded. But that's not how you do it. If you want to look at the trend of inflation, you look at and you want to compare what it was in 2019 with 2022, you You look at average inflation for both years, and then you compare. It's a very elementary point. And if you do that, inflation in Senegal has not increased by 11 times. It's increased, but by 4 times. More importantly, because it's at 7.5, it's still below the 10%, which means that it's still in single digits, and therefore the effect of prices is not very significant. Let me give you an example. If you bought something for 100 cedis in Senegal in 2018, in 2019, the price may have gone up to 102 cedis, 102 CFA. This is just a rough example. In today's terms, it will have gone up to about 107.5 CFA. So if you are a citizen, the effect, while important in statistical terms, is not as crazy as if, in comparison with if you were in Ghana and you bought something at 100 cedis in 2019, and that now has gone up to 137 Ghana cedis. So the absolute numbers matter a lot in inflation, which is why we try to keep it within single digits, not just in number of multiple jumps that occur within a band, but particularly below single digit. And in Ghana, we have an 8% benchmark or 8% target. If you are 37%, you are about 30% above your benchmark. If you are in Senegal, where the Central Bank of Waimu has about a 3% target, and you do 7.5%, you are very much within range. So that is important. On top of that, Senegal is growing, and Senegal has a direct exposure to Ukraine and Russia because massive imports come from that country, those countries or that area of the world into Senegal. When you look at the 20 countries in Africa that are most exposed to both Ukraine and Russia in terms of imports, in terms of trade and investment and the like, Ghana is not on that list, the top 20 countries. Then he goes to Togo, and I think Mr. Ahiaba has made points about whether Togo is developed or not. I don't think that is the analysis. The analysis is whether or not cost of living in Togo is worse now than before. And here too is the same point. The president makes a massive miscalculation by taking one inflation number in a particular month, another inflation month, the year of reference, which is 2019, and then strike some balance and say it's increased by 16 times. And that is not correct either. Togo's inflation rate of about 5.6% averagely this year is still within single digits. And more important than that, because of the same analysis that I made, if you start off with 1% and you go to 5%, while the multiplicity might be similar to what we are seeing in Ghana, the fact that it was so low, the inflation rate was so low, means that you have more room to let it grow a little bit without impacting prices and making people suffer. So somebody who was buying something at 100 CFA 3 years ago, 2019, in Togo, and now having to spend 105 or 106 CFA, it's much better off than somebody who was spending 100 cedis in 2019 and now having to spend 140 cedis or 137 cedis. That is the right analysis that you have to make. And I think that as president, we expect that the degree of accuracy, factual integrity, etc., that his speech must have cannot be gainsaid. It's really critical because it goes to credibility of his office. It goes to credibility of the strategies and the policies that he's pushing. Let's go back to the analysis around which we've already had in the studio, and I'm just using this diagram to illustrate. Suppose you take a number of countries in Africa, and you say all of us have been hit the same way by COVID-19 and Ukraine. So the wrecking ball you see at the bottom of the screen is COVID-19 and Ukraine hitting all of us. We all started at different places. You can see that already Ghana was fairly high, right, in 2019 compared to some of these other countries in inflation terms. Even on currency depreciation, in some instances, we were worse off than some of the countries in 2019. But notice the spring that is beneath Ghana. So Ghana is the red ball that you see on the right. It represents a lot of issues that we are compressing. Now, when the COVID shock and the Ukraine shock hits all of us, you see that two things will happen. Depending on where you already were, you will move up in proportion. So if Ghana's situation was already problematic, it will go up by, say, the same proportion. But if Ghana was also, in addition, suppressing a number of other vulnerabilities or hiding a number of other vulnerabilities, then the spring will on call and to go up even higher than it will have gone proportionally. So on both score, the fact that in 2019 we're already more vulnerable, because if you look at things like inflation, exchange rate depreciation and debt service to GDP, how much of our total income do we spend on our debt? If you look at all those numbers, we're already worse than some of our, most of our neighbors in 2019. And I'm talking about the vulnerabilities. I'm not talking about things like growth, which is prospect for the economy and things like that. In those kind of things, we're better than a lot of our neighbors. But in terms of vulnerabilities, how much debt we've piled up, how much of our total money we used to spend on debt, how much is our inflation, how much is our currency vulnerability. When you take those things, that gives you vulnerability as opposed to prospect or as opposed to potential. You need to distinguish the two. When you focus on vulnerability, Ghana was worse in 2019 than most of our countries, most of our neighbors and our peers. So when COVID hits, naturally you'll be raised, or rather things will worsen in proportion to your vulnerability. That's the first point on analysis. The second point of analysis is that on top of that, things you've suppressed will unwind. And I'll mention a few of them. So that's the proper way to look at why the situation in Ghana is worse than the situation in other countries. And in a short period of time, we have shown that the situation in Ghana is worse, only on a point of view of vulnerabilities, as well as the current impact on cost of living because of the high inflation rate and the fact that that high inflation rate has gone up even further. So we now go to what is this spring? What is it that Ghana was sitting on that COVID hit and then it unwound? It started from a lot of wasteful spending. Some of our procurement prices are the worst I have seen in Africa. And when you look at the degree to which we use non-competitive tendering, some of the countries that we claim are not democratic countries, and therefore we lord over them, and we think we are so high and mighty, do better than us on competitive tendering. Go to Uganda and compare the number of procurement activities that are pure competitive tendering versus Ghana, how often we use single source and non-competitive tendering and things like that. Look at the extent to which fiscal anchors are observed. Look at the proportion or the degree to which budget implementation is monitored and obeyed, or rather complied with, compared to Ghana, where we are constantly off track our budget implementation. Education and health, often 30 to 40% off track in terms of spending. Compare to the other countries in Africa and look at that, the quality of the fiscal management. That's what we've seen in Ghana over the last couple of years, and you'll be quite surprised. So you have wasteful spending, or at least spending that's not very efficient. When you do that, you have fiscal deficit because your expenditure is much higher than your revenue, which we all know in this country. We have an expenditure of about 130-something billion this year. We can only raise about 75 billion or 80 billion. That 50 billion that we cannot raise in revenue, we must borrow. So naturally, your debt will keep piling up. When your debt keeps piling up that way, you create other factors around servicing. So you're spending so much of your money paying the debt that you regenerate some of the initial problems around the fiscal deficit. And then on top of that, and as I will show very soon, you create concerns about the direction of your economy. You start to see investor flights. You start to see money being printed in different ways. So I'm using it metaphorically. Money can be printed in different forms. The central bank can buy government bonds. It can do some of these repo transactions that it's currently been doing that. Few of us understand what exactly is going on. But it does a number of things that expands its balance sheet. But because the central bank is not very productive, it has 3 or so companies that it owns. They don't really produce very much, gifts and the likes. So if you take the balance sheet of the central bank, most of that is generated by creating money through various schemes. Now, creating money like that will obviously spur inflation. That will lead to depreciation because in a way, depreciation and inflation are price movements of a different type. Depreciation is really very much the price, the CD itself as a price, losing value. And inflation is the price of most other things losing value. And they are very intertwined. If you have spirals of inflation and depreciation in that fashion, you're going to have economic decline and it's going to turn right back up. So you have these cycles of vulnerability that becomes the spring on which our situation is sitting. And when you have a shock, it expands the problem. So that is the real analysis that I think the president is missing. The fact of the matter is that by the time the president spoke, Ghana's inflation was the worst in the region, only better than the likes of Sudan and Zimbabwe. Sudan is having serious fragility issues, serious insecurity issues. Zimbabwe has had an economic collapse for the last 2 decades. It's surprising that the president went to find a few countries that have very low inflation and therefore have room to increase inflation a little bit when they have a crisis, as opposed to comparing to countries that have similar inflation to us usually, like Nigeria, Kenya, Uganda, and Zambia. When you look at all of those countries, our situation is the worst, including having the worst performing currency in the world, not in Africa. Take Zambia, which also had issues to do with debt and things like that, and the government took a very firm, bold decision. They didn't even get an IMF program for more than 3 years of chasing. But they were committed to their own fiscal consolidation program. And you realize that even though inflation shot up to 22% in 2021 in Zambia, it's now down to 9.9% today. And that is notwithstanding Ukraine war and all of that, because the policy measures were being reported. And then you do see the Songa advisory report that I'm sure you've seen shows that some of those factors, like the fact that our currency is worse, etc., means that even when prices are global and therefore inflation is imported, we still have problems more than other countries. So, for instance, fuel is bought on the global market. Ukraine, Russia has definitely increased the price of fuel. There's no doubt about that. Why is it not uniform across the region? It's not uniform across the region, and Ghana has the highest diesel prices. And petrol now, because of the recent increases, we are now also the highest in terms of petrol. We were number 3 before in June when Songa Advisory did this analysis. We are now the highest. If you add that to diesel, we are now the highest in fuel prices generally. Why is that the case? The case is because in our case, we have other vulnerabilities like exchange rate and the rest hitting you. And that's why it's very important when we are doing the analysis that we are very contextual in the way we look at it. What caused this, my argument, and the argument of a lot of people in the civil society movement, particularly those that are in policy analysis, is that a lot of it is policy failure. And that policy failure can be seen in different ways. So when you think of it, in 2021, despite COVID, despite the fact that the global economic conditions were very tight, the government went to the market, and the market gave the government $3 billion. Why? Did the market not know about COVID? COVID and all of that. The market knew, but the government went to paint a very interesting story and got $3 billion. The problem was that it then went back around August, trying to raise another $2 billion. And then when it was, the signals that it was getting was that no, people are beginning to get concerned about why are you raising so much money. It dropped it down to $1.5 billion, but refused to withdraw at that point and kept pushing. That also made analysts, curious, and they started to investigate. So if you begin to look at the bad press that Ghana started getting among international financial analysts, you will see a big tick up around September, October of last year, where we failed to raise that $1.5 billion and abandoned that roadshow. Fascinatingly, we did not discuss it a lot in Ghana, but it was a huge dent on our credibility. And that was entirely the decision of the government to get Ghana into that cycle, into that trap of bad press and analyst scrutiny that is not favorable. Because you've raised $3 billion. The world is facing serious capital market tightening. People are trying to cut their quota according to the size. And then you go back to the market trying to raise even more. In a time when people are becoming a bit jittery about the global economy. So you see that there is a sudden sell-off in our bonds, beginning in September, when it became clear that the market will not give us the money, through October and November. And by the time we hit January of 2022, the bonds were being thrown all over the place. So the argument that this has something to do with Ukraine is kind of laughable, because COVID, we got the money when COVID was ravaging the world. We got the $3 billion. And by the time our bond sell-off began, Ukraine war has not started. You can see the numbers on the screen yourself. And everybody can go and check the Bloomberg terminals and other source of information. And you will see that massive sell-off in our bonds is what caused the ratings downgrade in February of 2022 and destroyed our international capital markets reputation. That's policy. On top of that, when countries were being warned that because of these tightening conditions, you may not be able to raise money and you may have issues servicing your debt. Here is a global program. All countries that feel they will have vulnerabilities come so that we will suspend the interest rates you pay. They Ghana say no, we won't touch it. We won't touch it. Therefore, we are too proud, I don't even know what the argument was. But we already knew that these pressures were building up in our economy, and therefore, if we had an opportunity like this, which kind of give you room not to appear as if you are defaulting, but it's prices driven, and it gives you cover, you say, I won't do it. So Ghana refused in that same November 2021, after it failed in the capital markets to raise that money, to do the DSSI. And a lot of analysts became very curious. We started getting another round of bad press. What is wrong with this country? That is what led investor flight, the beginning of the investor flight, because it appeared as if we're not on top of the sound decisions we must be making if our policy positions are to be taken as credible. So it's like, is the country being managed properly? What are these sort of decisions? If you think of it that way, then you say, okay, is it possible that these vulnerabilities are just structural to our economy in the sense that it's always been the case? Yes, there is some degree to it, it's always been the case, but it's got worse. It's got worse over time. This is a graph of our fiscal deficit, how often our expenditure exceeds our revenue. And you see that it started widening from when we got oil, but it went through the roof in 2017. It went through the roof in 2017. And that is very, very, very significant. The other point that we also have to make is that because the debt growth, how much our debt is growing, has two components, the external and the domestic. Sometimes we get a bit confused about how the dynamics are playing out. For many years, for about 2 decades, our local debts, how much we borrow from Ghanaians and banks and things like that, never crossed 25% of GDP. It fluctuated always around that level. At one point, by 2019, it had hit almost 50%. It means that relatively, we're starting to put a lot of the risk within Ghana. But the reason why that was possible was because we're also borrowing large amount of dollars. So the crowding out effect that we knew in the late 90s were no longer being felt. Because in the late 90s, we knew if we go and borrow a lot of treasury bills and borrow a lot on the domestic market, you have a crowding out effect, prices will rise, it will have an effect around the economy. And we're very, very, very common in Ghanaian policy discourse to warn about the government not borrowing too much in the local market. The reason why we're able to do it and shift the relative amount we borrow so much, so we move from something in the region of about domestic debt of 66 billion to a situation where now it's over 200 billion. The reason why that massive shift in 2017 to now was not being felt in the economy was simply because we also get about $6 billion per annum, the largest increase in Eurobonds we've seen ever. It moved from about total Eurobonds being about 3.5 billion to 4 billion towards the end of 2016 when we got our last raise, to a situation where we are now around $13 billion plus, right? So that massive inflation meant, therefore, that because there was a lot of forex, it was somehow counterbalancing. I'm being very crude at economics here. It was counterbalancing. Now, in that sense, you could do a lot of crowding out in the domestic markets, and it will not feed through to inflation and exchange rate depreciation in the way that in the late 90s we used to see. Because in the late 90s, we didn't have massive injections of Eurobond and the rest.
All right.
Now that we've, the Eurobond effect waned off, it's like a steroid, and it's waned off. We're having serious challenges in both inflation and depreciation for that same factor. And then on top of all these things that I've told you about, the government started to reinforce it with policies such as e-levy, which was an interesting idea when it started, but needed very careful thinking through about what it meant in respect of our overall taxation policy with respect to digital, which GRA was doing. So GRA had got this support from the United Kingdom and was studying that a lot of the economy was becoming digitalized. How do we get more money out of it? And then it was rushed out before that process was properly concluded and proper policy measures could be put out. And the way it was designed was a sentiment dampener. Because it was a sentiment dampener, most of us predicted at that time that we should watch the inflation rate and we should watch the cross effect on consumption taxes. It's not about whether or not they will get the revenue that they were hoping for, because we all knew they wouldn't, and we published that they wouldn't. Every serious analyst in Ghana published that they would never raise that money that they were saying they would raise, because other countries have tried it all around the region. Some have even abandoned e-levy and the rest, because it doesn't seem to generate enough money for some reason. A lot of it due to a very complex pattern that I can't explain here. So we knew it didn't raise the money, but we also felt that if it wasn't designed properly, it would have huge impact on inflation. And the government refused to listen.
All right.
When you look at the numbers around our depreciation history, the trajectory of the depreciation of the currency and the inflation rate, you will see that on the left is inflation. A lot of the problems started around that February to March when they were insistent on passing e-levy and sentiment was worsening. And it is from that time on that the trajectory takes a massive uplift. Same with the city situation. So clearly, all of those things were causing investors to lose confidence in the economy, was causing a lot of business people to feel that they need to hold back their money.
Until we got shut out of the Eurobond market.
Yes, we got shut out of the Eurobond market, but don't forget that we have been shut out of the Eurobond market since November 2021, right? The argument I'm making is that we had sudden jumps, not the same level, because otherwise we'll have seen a sudden jump in October 2021 when we couldn't raise the money when we went to the Eurobond market. Remember that we went to the Eurobond market in in August, trying to sound out the market. And around September, tried to raise money. And around October, realized we couldn't raise the money and abandoned it. That was 2021, October thereabouts. My argument is that we didn't see a sudden movement immediately, though the bond sell-off began, but it worsened when e-levy and things like that, and the fact that the government couldn't pass its budget because it wouldn't compromise on e-levy, created massive concerns about investors about the direction of the economy. And then on top of that, the government continued to press on with the e-levy thing, and therefore reinforced the view that investors had that we had turbulent times upwards, and everything then went through the roof. You will also see that just this year, around August, we started to feel pressures in the currency. It wasn't as bad as it is now, right? The government then said it's all speculation and started to mount a manner of disparate policies, disjointed policies, because all of it was speculation and demand was not the big problem, structural demand was not the big problem. And he went to the Council of State and assured the Council of State that this was all about speculation, they have got it handled. The market look and listens and watches and observes, and you see a little lag. And then as soon as September, things started to build up and investors started to see that, no, actually people are trying to repatriate money because investors want to leave our city bonds and they want their money out and they're not getting the dollars from the bank. People are trying to import and they're struggling. It's, no. This government is not diagnosing the problem properly. And therefore, I don't...
Bryce, we have done some 25 minutes and we need...
3 more minutes. And let me just wrap up. 3 more minutes.
Okay, please go ahead.
And so when that happened, you see that investors give them a little briefing space and then it shoots up all of a sudden again. So what I'm trying to explain is that there is a lot of policy misdiagnosis, and the policy misdiagnosis leads to people being concerned about the quality of the policy management and the economic policy management, and therefore they don't think things are going to get better. And that's when you see this speculation hedging issue that we've been talking about.
Okay.
The government blames speculation. Speculation is just the wrong way to look at it. Speculators are primarily trying to make money. They're trying to make profit. They believe that the city will fall or rise, and therefore I need to hoard up on one, go long on one and go short on the other, and I'll make money. The problem is, if it was only speculation as opposed to rational actors not trusting that things will be better in the future and therefore flying to safety, we will see different behaviors. That every time it was likely that their predictions are not holding, speculators will dump back the dollar, and the strengthening will be long-standing because now they know they can't easily make money. Because most of the problems are hedging related, and therefore people are making decisions that are very rational. And the fact also that the structural demand problem holds, because a lot of the so-called speculation, they talk about the black market, which is a street market issue, is Forex Bureau overflow. And Forex Bureau is just 1.2% of the overall Forex market. The bulk of the market is in the banks. And the bulk of the banking transactions are business related. People making real business decisions. You cannot blame speculation and black market for something that is not speculation and black market, and expect investors not to see through that and not to anticipate. On top of that, the government anticipated all of this because when it was going to issue its 2020 Eurobonds, it had to disclose all the economic vulnerabilities. And it clearly said that it expects that its debt servicing costs and the rest will go through the roof, and therefore there are risks associated with the bond. This has nothing to do with COVID, because COVID had not yet come, and this has nothing to do with Ukraine. So go and read the government's own prospectus that it used to raise funds. On top of all of this, as I've said, the central bank is dramatically expanding its balance sheet, creating more money in inverted commerce, and creating more inflationary spirals. It would mean, therefore, that we cannot trust the government's prognosis because they are not diagnosing the problem properly. And if we cannot trust the government's prognosis, then we come to the issue of the debt restructuring. Because a lot of the debt restructuring logic is anchored on the way the government has defined the problem. First and foremost, the president's promise that by 2028 we'll bring down debt to GDP to 55% from the almost over 100% that it currently hovers. It's not really a response to any serious issue because a debt restructuring is not about how first of all, there's an event first before we can think of the process. there must be a period in which you default. And that default can be simply you announce that you restructure, or there's a real default where you say I can't pay. They are similar. Now, that default or that restructuring announcement is a period in time. The question is what happens after that period in time is what is most important, is whether or not you will get enough relief so that going forward from that time onwards, the pressures in your economy abate. That's so critical. My argument is when you look at the analysis that has been done in 2021, it's not too long ago, by the Ministry of Finance itself and by the IMF, none of the projections shows that we'll be able to reduce debt to GDP significantly. And this is the Ministry of Finance's own analysis about where we are likely to be in 2025, which is about 87% and things like that. This is the IMF's own projection, which shows that by 2025, this is where the fiscal deficit will be. This is the projection also of how much external service to debt service to GDP will be, etc.
Okay.
All of those things tell us that this notion that we can do 55%, very recent. And we don't yet have the track record.
Right, if we could terminate it here.